Welcome to the Relatable Oklahoma Realtors Podcast, the show that sets out to demystify the world of real estate. Whether you're a first-time home buyer, investor, or a realtor with years of experience, this is where real estate is discussed and explained. Join me now for our hosts, Stacy and Burl Stricker.
So, Warren, thank you for being on our podcast. Sorry about the delays.
My brother.
It's still Stacy's fault, not mine. But yeah.
So my brother Warren Woodward is doing Oklahoma Relatable Realtors Podcast.
That's good.
Yes.
Much better when you say it.
Yeah.
Mine has delays in it.
So my brother has worked in this industry for years.
And like you were saying earlier, that you basically are contracted out by the insurance company, especially in major catastrophes or whenever.
Not so much anymore.
Also not so much anymore.
That's what he said. That's how it started.
Yeah, that's where I started. I run the field operations for a property. So the adjusters that work for me and the managers that work under me all are doing that. And so those days are done. I get to spend most of my time at home working.
Yeah, that's a big difference. You were on the road.
Yeah, 9 to 10 months out of the year, most of the time.
Yeah. Gosh, that's crazy. So Earl and I talk about this a lot because, his son, Cortland, he turns in these claims. Well, you ask.
Yeah, and part of it, you're a lot more of an expert at the whole process than I am. But I'm very curious. Like, I guess in some ways, the numbers just don't make sense to me. That's one of the reasons that I wanted to ask you or have you on, is because you take, for example, like my experience with insurance companies in the past is that like when I owned a nursing home, for example, that I would pay year after year, month after month, and I really never had any claims. And whenever, every once in a while, let's say maybe twice, I did file a claim and it was denied. And so I had this idea that you had to have insurance, but you never actually ended up using it. You couldn't use it. And that makes sense how that financially, it's like, okay, the insurance company, they're getting, but they're not paying out. But then I see these situations where, we're replacing a $30,000 roof and maybe they paid $2,500 or whatever a year for their claim. And then they replace a $30,000 roof. And I'm like, how can that work out if they're replacing, let's say, the roof every 5 years or every few years? Those numbers just don't make sense. And then you take a catastrophe area, let's say a hurricane or a tornado, and you really start to say, man, how does this make financial sense because what you're told is your insurance will not go up with an act of God. So I'm wondering, like, and from your perspective, how does the math work and all that?
Because it's a pool. So you're not relying on you and Stacy's premium to build the big buildings. They're getting everybody in the market. They want to get as many people in the market as possible to spread their risk across a pool of Oklahoma. Mm-hmm. So there's lots of places where that don't get hit by disasters, especially like a tornado, very isolated. So yeah, Elk City's devastated, more Oklahoma's devastated, but Oklahoma City wasn't. Norman wasn't. Tulsa wasn't. So yeah, it's big press and it's a lot of money. So yeah, the companies may not make money to look at that individual policyholder, but they're counting on the fact that they have, thousands of other policyholders in the area that did not get affected by that event. So they're not going to lose money by paying out claims on those losses. And it's also a pretty complicated question because you have certain states allow reinsurance, which is a third party they buy to help offset some of the risk that they may have to pay. The insurance company may have to pay out directly. So they buy insurance on the insurance, and there's a market that does that. Like Florida's a big reinsurance market that those carriers down there don't have to have reserves of tens of millions or hundreds of millions of dollars, depending on the number of policyholders they have. So they buy reinsurance to to help prop up any and offset any risk, so they don't have to hold that money in reserve. They have these other companies that they're paying insurance to that will end up being a de facto reserve for them. So yeah, you're right. So like my dad has had to replace their roof 5 times since they've lived there.
Mm-hmm.
The company isn't making any money off the homeowners policy, but they have 2 auto policies also. And so it's not just selling homeowners, it's also an avenue to start selling them whole life, term life, the investment vehicles that a company may offer, and then auto, which used to be a big generator of for a lot of these big companies. That's their major moneymaker, is in the auto side. And because they're 100% depreciated value, it's not, they're paying premiums over a long period of time. There's a lot of them. The risk is spread out over, hundreds of thousands, if not millions, of different automobiles. So their risk is far and wide. Rates, and then you also get into rates, which are sometimes regulated by the state. That's why California is a very hostile state to insurance companies. And you see the big insurance companies are starting to pull out and no longer insure for wildfires, or no longer write new policies for residential and commercial property claims, properties, because they are not allowed to adjust rates based on the frequency of claims. Oklahoma has the highest insurance rates in the country. I read that somewhere, relative to property values and how it relates to property values versus the rates of insurance in other states. So that's because we have so many storms here. So Oklahoma may not make a lot of money for State Farm or Progressive or Allstate, but New Mexico might, or parts of Texas might, that doesn't get hit all the time. Arkansas, Louisiana, they sometimes will break out certain states as their own separate company to limit the risk to the entire company. So Florida may have a Progressive Florida or an Allstate Florida, and then they may have a Texas Lloyd's company that is underwriting all of their policies just in Texas. So if Texas has a really bad year, it doesn't affect the entire company. So it's
I had to do
not an easy question to answer, right?
Yeah,
so
no, I know. And it's like
$30,000 roof isn't going to, that's a lot of premiums. It's 10 years of premiums, most likely, or 15 years of premiums to make up for that $30,000 roof. But they're counting on those people who don't file claims to offset that.
Well, and I think you brought up a good point. It's not just dealing with homeowners insurance. It's dealing with auto, and it's dealing with life insurance. And, that to me starts to make sense. I had to do a risk assessment on a facility like a nursing home. And this is more for like emergency management, but also like I looked at the risk assessment. Most people associate Oklahoma with tornadoes, of course. But really, when I did the risk assessment, I was actually surprised that tornadoes was one of the low risk for this nursing home in Oklahoma. In other words, they were far more likely to have a dryer catch fire, and a fire was more likely than the tornado. And I think that most people would be surprised by that actually the risk of getting hit by a tornado as an individual homeowner or whatever is pretty low, I think, compared to other catastrophe, other things that could happen. Would you agree with that?
Yeah, they make the best press because it's the most devastating thing that you can walk into is a total loss tornado. Yeah. But those are typically very isolated. So
I think about
1 or 2 mile area.
Yeah.
Or a 5 mile area versus the overall Oklahoma City. One little section of Oklahoma City could get just devastated, but then you have 95% of Oklahoma City untouched by the tornado.
Yeah. Well, especially when you have something like Moore and that area has been hit twice. And what was that, like a 15-year?
More than that. It was twice in 1 year. I mean, we had 2016, we had 2 tornadoes go through Moore. That was also the one that went through El Reno. And then before that was that 99 was the big one, was the real big one.
Hit that same area.
Right.
So Moore's definitely different. What would you say, like, as like a homeowner, like they're filing a claim, and really, I remember you saying to me, like, when you first got into this business, and I hear this a lot in real estate, like when I go to list their house, I'm like, hey, when was the last time you filed a claim, or how old is your roof? Oh, well, there's not any leaks. Well, that doesn't mean anything because we can't see damage, from the grounds. So like when they file a claim, how would you tell like a homeowner, like what should they look for? It's not just hail damage on your house. It can be other places too, right?
You're talking just to identify maybe enough damage to worth filing a claim?
Right. Because like, do you feel like the adjuster's working for them or they're working for the insurance company to save them money?
All right, well, let me just tell you how I was paid. And I wouldn't be doing this business for 21 years, 22 years now, if I felt like I was trying to, shortchange the person that I was looking at their property. My job was to go and identify all the damages that are covered under the insurance contract. And I got paid based on the amount of damage I found. So it was beneficial for me to do a thorough job, know the policy, first of all. So what's covered, what's not covered. We're dealing with weather claims, wind and hail. It's pretty straightforward. You either got damaged on that date or it did not get damaged on that date. So I'm walking around a house. I find hail damage on a roof, gutters, screens, siding. I'll go look at the flower pots. I look at, the sheds out back and any buildings are on there because I get paid for everything that I look at. So I get paid for just getting the claim. I get paid for walking on the roof. I get paid if the dollar amounts start adding up. And then, so the more damage I find, a new tier of billing from my end as an independent adjuster goes up. So if I get into a $20,000 claim or more, then my billing is a small percentage of that. That's based on the percentage of the estimate I write. So it's in my benefit and the homeowner's benefit and property owner's benefit for me to understand the policy and know what I'm doing and to take the time to do a thorough inspection because the more damage I find, the more I get paid for it. So
I don't think most people realize that.
No, they don't. I mean, how would an insurance look at it the other way? How would an insurance look at the other direction? How would I get paid more to find less?
Yeah.
Mhm.
There's no way for an insurance company to do that. They don't know what the damage is. I'm the one telling them what the damage is. So for me to get paid more to not pay them, first of all, it's bad faith. So every state has laws about insurance claims and claim practices and claim handling. To me to go out to acknowledge damage from a covered loss and not pay for it is bad faith on my part because I'm the expert. I'm the one who knows how to do the job. I'm the one who knows insurance. I know property damage. I know how to write an estimate for property damage. So that's my job. That's all I know how to do when it comes to insurance. How I approached my insurance claim handling was I'm here to find everything and then compare notes with you when you're done to make sure I didn't miss anything. Because to be honest with you, I don't want to hear from a policyholder again. I want to make sure I do everything right the first time. I write a good, thorough estimate that covers everything that's covered in the policy. I'll even point out to them things that I found that isn't covered so that I don't get asked about it later, like rotted siding on the opposite side of a house that got hit by hail. So if I'm walking around and I see that there's some rotted wood siding on the bottom of it, I'll take a picture of it. Tell the policyholder, look, there was no damage from the storm. This here, just in case you come out and see it, because most homeowners don't look at their houses. They don't have any idea of really the overall condition of their house. They're not looking at it critically. They're looking at it like it's good enough. They're looking at the flowers, looking at the yard. Nobody is as critical about their house until after something happens to it. So it may be years that they've gone by that they really haven't even noticed anything going on. Rotted windowsills or paint that's flaking off, all that kind of stuff that I notice because it's my job to notice and to break out what's part of the storm damage and what isn't part of the storm damage and what can be included in the claim and what can't be. That's my job. So I'll point out to them, hey, this stuff is not covered because this wasn't from the storm. However, all this other stuff is, and I'll write an estimate for you. And I'll review the estimate because a lot of times people don't understand how an estimate looks. They don't understand that insurance claims are a process, that we write an estimate. I write them a check. That's not all the money that they're due. They have depreciation that's held back on the front end that they're entitled to get once they do the repairs within a certain amount of time. So there's a lot of questions and a lot of processes that are involved with insurance claims that if you have a knowledgeable, experienced adjuster who's out there, they're there to do right by you. They're there to find every benefit within the policy language that's afforded to the policyholder. Because to be honest with you, our job's a lot easier when we say yes and can pay for it than to say no and tell them why, because that requires a lot more paperwork and time and effort. So paying for it's the easy part. Saying yes is the easy part. We all want to say yes because our lives are a lot easier saying yes than it is no.
Yeah. I remember I had called you when I filed the first claim when it was just me in this house. And you're like, even mentioned like, when we had a big storm and you said, did your grill cover get damaged? And one thing I've noticed just over the years when I help people, and it's really learning from you or just over time, is your hot tub covers. And, because people don't know that stuff.
Mm-hmm.
And so
it's all covered under your policy.
Yeah.
That's why I ask questions about that and look at that stuff when I would do inspections.
So tell me if it's like, is there a difference so someone like you don't work for, and I'm just going to use State Farm as an example, because that's a big name. So you don't work, you're not hired, a paid employee by State Farm. You're a contractor. But so State Farm has a lot of their own adjusters. Do they look at it the same way?
They should, to be honest with you. They go through months. A lot of those big companies, they go through months of training. And again, they are there to find every benefit within the policy to pay for damages from that data loss. And so that's their job. So they should be doing the same thing, and they should approach it the same way that an independent adjuster approaches it, because that's their job and that's their career. So they're wanting to move up in the ranks within their company. So they want to do well as well. So they should be approaching it. And that's where knowledge and experience comes into play. Now, you may get a new adjuster because we all have to start somewhere.
Right.
They're not going to be as knowledgeable. That's just a fact. And there's going to be typically issues with that because they just don't know everything. They don't necessarily know the software, the estimating software inside and out. They don't know the policy inside and out. And just like a new person at any job, there's things they're going to miss. Well, that's okay. That's why you need a good contractor on your end that understands the insurance process, because if we miss something on our inspection, it's not the end of the world. Doesn't mean we're never going to come back and look at your house or consider any additional damage. If there's something we missed or we didn't see or can't see, because we're not there to guess what's damaged. We're there to pay for what is visibly damaged. And something is discovered during the course of repairs, the homeowner and the contractor need to stop what they're doing, call the insurance company, document what they're seeing, to at least see if it's considered, if it's part of the loss, because it could be added to the claim. The claim isn't just closed because I send a payment to the policyholder and hang up the phone and move on to the next thing. The claim's a process. So it can stay open for, like some companies in some states, it's 180 days. Some of them it's a year. Some of them it's 2 years that they can file for additional damages under the same claim, as long as it's part of the same data loss. And we see that with bigger losses, like a tree falls through a house. There's going to be a lot of damages we just can't see because there's a tree in there or it's a bunch of debris on the house that only really gets discovered as the repair process begins. Again, we're not in the guessing game. We're there to evaluate what's damaged. And if we can see what's damaged, we'll pay for it. If there are things that are discovered that are hidden that we can't see, like broken pipes or electrical wiring that's stretched and broken or gas lines that we can't see, bring that to the adjuster's attention, because that's owed. And we will reopen the claim and revise the estimate and issue a supplemental payment for those items that were missed.
So what are your thoughts on, like, if someone's filing a claim on their roof, do you recommend that the roofer be there at the same time?
As an experienced adjuster, no, I don't want them there. They're a distraction to me. All they're trying to do is sell a roof. They're roof salesmen. So I do have a negative opinion of roofers in general, because they're there to sell a roof. I have a job to do, and that's to find all the damage. I don't need somebody asking me where I'm from, what the weather's like, yapping in my ear. I know how to do my job. Now, there's ones that are really good, and they should leave you alone, which most of them would leave me alone and let me do my thing, because I would say, hey, look, I'm going to go do my thing, and then we'll get together, compare notes, and we'll look at the roof together. That's fine. Just don't talk to me while I'm doing it. because I've got numbers I'm trying to write down. I'm trying to write down notes of what I need to include. And all a person's going to do when they're there with the adjuster is distract them, and they're going to miss something. And nothing frustrates me more than missing something and having to rework a claim or add something to it that I'd written down or that I should have captured because I'm answering a question. Either the question started at the front end of the inspection or the back end of the inspection, not during the inspection. So no, I don't know. I don't want contractors there looking over my shoulder. Name another job where that happens. Where somebody's trying to grade you.
Yeah.
I don't go back and look at the guy flipping burgers, making sure he's cooking my burger right. I just trust that it comes out, it's going to be okay. If I have a problem with the burger, I'll bring it up at that point. This is the only career where somebody can come out and critique you as you're doing the job. All that's going to do is make a poor claims experience for the policyholder, and the adjuster is going to miss something because they're being distracted by somebody yapping in their ear. There's a lot of stuff we have to capture. We have to take photos. We have to write notes. We have to do it in an orderly manner so that we go back and write an estimate that's thorough and complete. And if somebody's talking to us the whole time, we're going to miss something. And it's going to end up being rework and additional handling on the back end that's frustrating for everybody.
I think that was a good point where you say, hey, I'm going to be there. We do this like with home inspections, like the buyer wants to come in and go over it after the inspector, like, hey, I'll visit with you at the end and we can compare.
They're busy. We're busy doing a job. Yeah. We have a routine. When we go out there, we should have a routine. And we get thrown off that routine and messes up the whole process. Right.
So if the roofer wants to be there, they should come.
That's fine. Just stay on the ground and don't talk to me, because I'll talk to you at the end of it.
Well, I think, as you're talking more, and honestly, it's like, man, and I hear the knowledge and experience in your voice, and like you're passionate about it. And I mean, man, I like a lot of respect for that, because like as you're talking, I'm like, okay, yeah. And part of what comes to mind, and I'm not saying this is the exact percentage, but I'm saying it reminds me of like kind of like the 80-20 rule. It's like we're kind of assuming like all adjusters, some people assume that all adjusters are bad and they just want to not pay, and they want, so we put them in this 80%, like 80% of the adjusters are bad, but really, I'm just like any area of life, you have like maybe 20% are inexperienced. Maybe they don't do a good job. Like I heard recently of an adjuster coming out and literally not getting on the roof at all and doing it from the ground. And, but I don't believe that, that's the majority. You have maybe this 20%, or when you're talking about like the roofers too, you have this 20% that are like just not thinking about, the right things, the homeowner and what's correct.
With that number.
Huh?
Because let me ask you a question. Are you going to if you go ask a car salesman if you need a new car or repair the car that you have, what are they going to tell you?
Oh yeah, for sure.
Right. They get nothing out of repairing a roof. They're roof salesmen.
Yeah.
I have no vested interest outside of the fact that I do get paid more for finding more damage, but it's not personal to me. Either the roof is damaged to an extent to total it, or it's not. I really, again, I care in one aspect. My job is way easier to say yes and just total a roof than to replace one slope or repair a few shingles over here that were damaged by wind or replace some vents. I would rather total everything I walk on, because my life is so much easier. The claims are written a lot more quickly. And the explanation to the policyholder is a lot faster when I can just say, you're getting a new roof and new gutters and new siding. Easy. That's a very short conversation. The longest part of the conversation is walking them through the rest of the process on how to recover replacement cost benefits, how to deal with a mortgage company that's showing up on the draft, and all those other administrative aspects of it. But to say no, when this car salesman and this roof salesman has been building up the expectation that you are getting a brand new roof, because a lot of times they're calling a contractor first to come look at the roof to even say, is it worth filing a claim? That's a rough one, because what's their experience? Their experience is trying to sell roofs to you.
Yeah.
Okay, that's fine. That's a job, and a legitimate job. I mean, there's people that we don't buy cars because we need them. We buy cars because we want them. There's usually not a third party out there willing to pay for your car if there's something wrong with it. Whereas there is potentially a third party, your insurance company, that could pay for a roof if you need one, if it's damaged. So the roofers are basically saying, go ahead and file the claim, see what they say.
Yeah.
Mm-hmm.
Well,
Otherwise, they make nothing.
Yeah.
Whereas I still at least make something going out there. If I don't buy the roof and find no damage, I still make something while I'm out there because I get paid for every claim I looked at.
I mean, I'll be honest, I will tell some of my homeowners, like if I go into a listing appointment and I know that there's been hailstorms and roofs replaced in that neighborhood, I'm like, hey, this could come up. I'm going to need you to get it checked out.
But if there's no activity in your neighborhood at all,
right, I'm not going to tell
usually a good sign that nothing has happened.
Yeah.
And then there's door knockers, these roofers go around, they're trying to open up other neighborhoods because maybe they get a company that doesn't send an adjuster out. They look at weather data and say, well, this hail was reported in this territory. We only have a couple policyholders in this territory. Pay for it, move on. It's not going to cost them anything. What it does do is that it starts a chain reaction that when my neighbor's getting a roof, let me call my insurance company. And that's what those contractors are hoping for, because maybe they get 5 extra roofs out of that neighborhood that they never would have, because there's no damage, they never would have received had it really been inspected by an adjuster. So, or you may find an adjuster who's inexperienced and they fall for the tricks of the roofers, the trick of the roofer trade. You never know.
What do you think? I did want to ask, Burl.
I'm killing flies.
What do you think about, like, I had a lot of friends that, not a lot, but people that lost their houses in a tornado in Elk City several years ago that dealt with personal property. That was a nightmare for them. So I don't what do you think the rule is on carrying coverage on personal property?
Typically, most companies will either do 70, 80% of what the house is insured for just by default. But you may be a collector or you have items that are, well, especially if you do jewelry or guns or something like that, you may want to carry personal articles policy, separate personal articles policy to individually, like if you have high-end jewelry, that will individually insure those items of jewelry. So you can buy one for a Rolex watch or a diamond ring or earrings or whatever. The rest of it, the homeowner's policy, is just all lumped together. So it's 80% of $400,000 house. Your contents will be covered by that. And contents, you can look at what would I move with me when I left the house? What would I put in a moving truck? That's your contents. I've had flood claims where I never received the contents list from people. That's highly emotional for people to start going through contents, and you have to account for all of it. So we don't know what you had in the house, especially a total loss.
Yeah.
It's all just a bunch of debris to us. We may be able to identify dishes and some clothing, see some clothing strewn about the neighborhood or in your trees or wherever it might be, or a bicycle here and there. But we don't know what you had. We cannot write that estimate for you. We rely on the policyholder to tell us what they possessed and to have some sort of proof of it. So beginning of storm season, I go around and just walk around with a video on my phone of every room.
Mm-hmm.
I don't know what I have, to be honest with you. So most people will undervalue their contents. And you have to remember the stuff that's out in the buildings that you have on your property or in your sheds or outside patio furniture and stuff that you may have in a different storage unit off-site. Those are all covered under your homeowner's policy. So you need to make sure that, or typically, first confirm that kind of coverage with your agent. If you store stuff off-site, you may have to have a rider for off-premises coverage or a separate policy for that. Or is it already covered under your standard homeowner's policy? Those are things that you have to discuss with your agent and your insurance company to make sure that you're appropriately covered for those kind of things. But contents is a tough one because it's a lot of items. Takes a lot of time on the homeowner's part or the property owner's part to list all of those items. Software has made it a little bit easier, but it's really up to them, the homeowner, the property owner, to list their contents and to provide some sort of proof of ownership of those items and the value of those items. So Google, eBay, Walmart, Amazon, all those are valid ways to price the items that you have. And we don't pay for what you paid for it. It's what it would cost to replace it today. So what really gets people in a bind typically are electronics, because the TV that you bought 10 years ago, that plasma screen TV that's 15 years old and you may have paid $10,000 for, is $1,000 TV now. And that's all you're going to get paid for it.
Yeah.
Because we could replace something better for less than what you paid for it. So but everything else, typically computers and electronics, go down in value, or you're getting something better for way less than what you paid previously. Most other things go up. Furniture and bicycles and all the other stuff we owe for like, kind, and quality, something comparable to it. And your job is to provide the pricing to us. We can compare them once we get the information from the policyholder, but our job is not to go research the pricing on behalf of the policyholder. That's your job.
I do remember hearing a lot of that, and I could see where it's emotional, because I can remember hearing friends say, like, I have to submit all this stuff. I have to submit proof. And really at that point, they were so beat down because they've lost everything.
Mm-hmm. So you think like the video, I mean, like you said, doing a video like once a year or whatever, and that seems like a very realistic thing to do. And, I've heard of people like, doing an inventory of the valuable items like guns and, collectibles or whatever, something that's really to them, and then keeping that in a fireproof safe or something.
I'd put it in a safe deposit box somewhere, the high-end items for sure, or the collectibles. Do the legwork up front, just the, clothes and things. That's the minor stuff. Those will all add up, but we don't need every sock itemized. We need to know about how many socks were in that drawer, how many pairs of underwear and shorts and shirts and t-shirts. If you're starting to say everything was an Armani suit, you may want to see the receipts for the Armani suit, or the receipts from the tailor, or whatever it is. But if you're just trying to list all the items in your master bedroom, you need to make sure that we don't need, like I said, every single pair of underwear itemized and where you bought them. 20 pairs of underwear, 50 pairs of socks, or whatever it is that you have, that you thought you had. Yeah. Insurance companies they're not going to haggle over that. It's the bigger items that they really want solid documentation on. Oh. Or if you're saying everything's less than a year and you've been in that house for 20 years, there's some questions that are going to come up. Where's the 20-year-old items? Everybody has them. Yeah. And don't forget the attic. I mean, there's people have crap in their attic they don't even think about.
That's a really good point, because I videoed the house right before storm season, but I did not think about the garage, the attic, the shop, because of course that's where all there's a lot of expensive things. All your
tool chest. If you're somebody, look in your tool chest, take pictures of that, and that'll just also help remind you of what you had, because you will not be able to sit down, and even if you're an extremely organized person, from memory, be able to go room by room by room to let you know exactly what you had, because include everything. The cleaning supplies underneath the sinks, whatever crap you had in the drawers in the bathroom, hair dryers and curling irons, working or not working, it doesn't matter. You still had them. Put them on the list, because the goal is to get everything accounted for, get the dollar value added up, and hopefully pay policy limits on it. And you should. Most people will have policy limits when it comes to contents, because if they've been in a house for any significant amount of time, new homeowners won't, for the most part, but people who've been there for 25 years will certainly have policy limits, because we just don't throw stuff away. Books, I mean, I would be, how could I list all the books? So we're not going to go we're not going to go by every type of book that you have. Break it out by paperback, by hardback. If you have a special collection of books, have some sort of documentation on that. Baseball cards, those kind of things. Wine, we'll pay for wine. That's still a content item just because it's alcohol. That's still something. And we pay for it if the temperature goes up, if the air conditioning goes out, because storms damaged all the power lines and you crushed your house and you didn't have any power. The wine bottles may be fine, but they all were in 100-degree weather for 10 days. It's ruined. We'll pay for that.
Huh. That's interesting. What do you
I
think?
won't pay for the liquor because the liquor didn't go bad, but
That's true, but wine could.
the wine will.
What do you think's like the most? What's something that people wouldn't think of besides that? I would have never thought that.
I'll tell you what most people don't do is they don't. I saw during the Oklahoma City tornadoes, and I've seen on other tornadoes. We have a lot of uninsured, especially in Oklahoma. We had a lot of underinsured properties. The replacement, they were tens of thousands, if not sometimes $100,000 less than what the replacement cost of the house was. And remember, we're not paying for land. We pay for just to build the house. So when you're buying a house, the land's included. But we're paying, depending on the severity of the tornado, we're paying sometimes for the foundation as well and to rebuild the entire house on the same plot of land. But the land value is not included in our calculations. It's just purely rebuild cost of the structures that are on that property. Fences, buildings, swimming pools, houses. Those things are all part of our estimate, or part of the different coverages available to you. And so we estimate for all of them if they were damaged. Most people are underinsured, especially out in the country. They'll go out and we'll have the homeowners, which policy would say it's a $400,000 house. Well, then you have $40,000 for dwelling extensions. Well, if you've added a pool in and you've added a 40 by 60 barn on the property, you're not going to be able to get that fixed for $40,000. Not to mention any, wire fencing you may have up around the property, as long as it's not a farm ranch, a business use. You're underinsured for your dwelling extensions. That's going to come out of your pocket. We can only write an estimate we can only pay up to $40,000 for that. We're not going to pay any more, even though the barn itself may cost $40,000. The tree fell into the pool, which means you have to rebuild the pool, which is $65,000. Which one are you going to put your money towards? The insurance company doesn't have beyond $40,000. There's no more money for the homeowner in that case.
Well, especially right now, like with the way building material costs has gone up, people really should probably reevaluate what their coverage is.
Every year, they should be telling them when they're adding something to a house, making an improvement to the house, an addition, or if they're building new structures on the house, then they need to be talking to their agent. We can't do that when we're out there. It's way too late by the time I walk onto your property, start evaluating that loss.
The mentality, and, obviously it's a poor mentality, but it's also a part of awareness. But I think the mentality is, if I tell my insurance agents about this new barn that we put up, that my insurance is going to go through the roof, and I don't want that, so I can't afford it, that kind of thing. And yet when you look at it from your perspective and you see that, if something happens, you're not going to get that replaced. So yeah. I think that mentality has changed. But when you look at like the homeowner, if it's $2,500, $3,000 a year, that's really, well, first of all, it's part of home ownership.
The cost of the home. It's factored in just like the mortgage cost.
Yeah. Well, I think people forget this is your biggest asset. You've got to take care of it.
Yeah.
So,
well, and you mentioned it earlier, and I think that, you can't expect, like let's say you've had some roof damage and make a claim, and like you mentioned earlier, it's like, you have chipping paint, in other words, I didn't maintain my home.
Right.
On the outside of it or whatever. And now I'm expecting that to be a part of the insurance claim, which, you made it clear that that's not, and it makes sense. And I think that that's also part of home ownership. It's funny when you go into older couples' home, like y'all's parents, like they almost keep that thing immaculate because they take care of their stuff, and I think that that's part of it's like maintenance and, and being aware that that's, an important part of owning a home. You can't expect that to be an insurance claim,
Right. It's not a maintenance policy. It's an insurance policy.
Right.
And we are bound by the contract in the policy of what we can pay for. And it's specific to sudden and accidental direct physical loss. That's the language that most policies have, that we are not there for wear and tear and deterioration over a long period of time. We're there because something happened on this particular date and time. And that's the damage we're bound by the contract to pay for.
What would your advice be, Warren, to like, let's say that I'm buying a home or shopping for home insurance and, whatever. What's your advice to an individual when they're looking for insurance and like, because also I feel like there's this aspect. I had this happen to me, and I don't blame the agent. I blame myself. But, I had a property and come to find out that it didn't cover the roof and I wasn't aware of it, Now,
Yeah.
again, that's my fault because I should have been aware of it. But what is your advice, like somebody looking for insurance? Like you mentioned one, which is make sure that you're not undercovered. I think that's important. But is there any other advice you give to somebody whenever you're shopping for home insurance?
There are insurance brokers and there's insurance agents and you have captive agents. I went with a captive agent, like an Allstate or a State Farm or a Progressive, that they only sell that one type of policy. They don't from that one company. They're not there trying to look at 25 different companies. I would find it extremely difficult to be an expert on 25 different companies. And then I think if you look at your captive agents first, get an idea of what those bigger, because they're typically the bigger companies too, what do they offer? Then you can at least take that information and compare. If you want to go to a broker and look and shop around for a lesser costing company, at least you have some information on what kind of coverages are provided. Because you can get into very complicated things like code upgrades, additional, what they call an increased dwelling. Some policies automatically increase every year because there's a COLA increase that just kind of follows inflation. And your premiums will be adjusted accordingly based on the VAT, because you're like the one I'm with. They adjust my premiums every year, and my value of the policy on my risk goes up every year to follow inflation. That doesn't mean I don't need to have it revisited to make sure that it's in line. Like Stacy said about the increased cost of materials, they called me that year and said, well, we want to increase your insurance by, that was almost $120,000. And I told them that's not going to happen. That's just too much. There's no way that it's going to cost that much more. This house is not worth that. I know what my house is worth, and I know what it could be built for the exact same square footage and design. It isn't going to be $125,000 more than I'm already insured for. So there's a lot that goes into it. It's hard. It's not, if you haven't had it before, you don't know what you don't know. Like in Oklahoma, they do offer insurance without coverage for roofs. Why? That's what's going to get damaged in Oklahoma. So make sure that your roof is covered. Make sure your home inspector looks at that roof, because I know they don't necessarily have to unless it's requested, or it used to be that way when we bought our first house. We actually request a roof inspection. You have to look at every roof in Oklahoma. The weather, they deteriorate so quickly, they will not last the 25 or 30 or 40 years that the manufacturer says they will. Our weather's too extreme. The heat, roofs just wear out, even without the hail. Or if you have small hail or just thunderstorms and the freeze and cold cycles, they're going to wear out before the 25 years. So they may need a new roof that isn't going to be covered under any sort of insurance policy. Things happen, that's just like tires on a car. They wear out. You have to buy new ones. Same thing with a roof. You may get lucky and get an insurance claim out of it and get it paid for by an insurance company, but that's not always the case. Make sure that if you're buying a house with multiple outbuildings, that the agent is aware that and if you're buying a big piece of property and that fence is going around all the acreage, that goes into your dwelling extension coverage. And you need to make sure that fence is you have enough money with the base policy and the default 10% dwelling extension coverage or other structures coverage to cover that. If you don't, you need to buy additional other structures coverage so that you have enough in case trees fall on your fences or tornado takes out all of your buildings and driveways and sidewalks and anything that isn't attached to the house itself. Those are all other structures, and those are covered separately under the same policy, but they have a different dollar value. So all that goes into play. You got to make sure you're aware of all that. If you have special high-end art items or jewelry, you need to have a personal article policy for that stuff, because you want to make sure that will cover regardless of what happens. The kid puts a tear in it because they poke their finger through a painting. that's covered under the personal articles policy if that painting had its own policy. If you do something stupid and ruin it, it covers stupidity. So there's things that you have to be aware of because the homeowner's policy typically is for contents is a named peril. It's covered on a named peril basis, which means it's listed in the policy what your personal article or your personal property is covered for. So fire, theft, water damage, that kind of thing. It's listed. Whereas the policy I have and most homeowner policies or property owner policies for the dwelling itself or the other structures is called an all risk, which means it covers for everything unless it's specifically excluded in the policy. Mm-hmm. So to understand, you have to have some sort of understanding of, do some research before you walk into the agent. So when they're throwing out all this vocabulary to you, it doesn't just wash over you as like a foreign language, because there's a lot of terminology and specifics within the insurance contract that a homeowner should be or a property owner should be aware of. Yeah. And if you're out in the country and you have a business and you're selling something from, like you have a wheat field behind you or just a field of stuff behind you, and you bundle that and sell hay, you now have a business. And if you're storing that hay in a barn and you're using that tractor to bale the hay, none of that's covered under a homeowner's policy. You've got to make sure you have a very specific policy for business for that structure, or you can convert it to a policy that will allow you to run a business out of your home. Mm-hmm. I got a Snap-on tool guy that stored his truck in his detached garage, stored all of his supplies and tools in his detached garage. And we all know how a Snap-on tool person works. They're an independent contractor and they sell that building as a business use, and it's not covered under the homeowner's policy. So the damage to that building was not covered by us because it did not meet the contract stipulation of cannot run a business out of a detached garage.
Wow. That's terrible.
Yeah.
Well, Warren, we appreciate you taking the time. I'm sorry about all the internet problems, all that, but I think it's great information. And really, I was like very for having you on because there's so much of it for the layperson, I guess, that it can become very complicated. And, I think that like such great information about insurance and how to pick it. And then, what you're talking about the, coming out and doing, your adjustments and I think the claims, and I think that, I think it's great.
I think for new realtors, they need to know how the process works. So I appreciate it. I know you're busy and it's good to see you.
Yeah, it's good seeing you.
Yeah.
All right, bro.
All right. Thank you.
Okay, good day.
Good talking to you.
Bye.